Today, I'm going to be talking about a stock that I recently sold all of my shares within my portfolio. This one's a little unique because it didn't really fit alongside the rest of the portfolio as far as dividend yield goes, but the stock has some interesting characteristics that made me hold on to it, at least until I did some additional research to really determine whether it fit the portfolio or not. I'm going to be explaining my thoughts on the stock just because although I did sell it, I'm not ruling out of adding it back to the portfolio at some point, which I'll get into in a minute. So first off, the stock I'm going over today is Nintendo. So pretty well-known company, maker of video game consoles and games, Mario, Legend of Zelda, and partial owner of the Pokemon franchise. So one of the unique things about Nintendo stock that is if you're living in the US, most brokerage accounts actually don't allow you to purchase the shares directly as they trade on the Tokyo Stock Exchange. So you're going to see this ADR thing up at the top. So typically what you'll have to do if you want to still invest in the company is you're going to have to purchase an ADR or American Depository Receipt, which is a way of just indirectly owning the shares in a company that trades on a different stock exchange. I'll cover just ADRs a bit more in a separate video because it is a bit outside of the scope here and I don't want to get too sidetracked. So there are technically two ADRs that trade for Nintendo, one under NTDOY and one under NTDOF. NTDOY is the more popular one and generally available on more brokerages. So if I actually try and go on Robinhood and try and search for NTDOF, I'm not going to be able to find it. Certain brokerages actually only have NTDOY. So NTDOY, it is a more popular one. It's available on more brokerages. It's actually a fourth of a share of NTDOF, so they're really not that different. But that is one thing you need to be aware of because when you try and look up the dividend history for Nintendo, make sure you're accounting for that. Some websites will mess up the calculation and give you the dividend history for NTDOF, but actually base the yield calculation based on like the NTDOY stock price. So this dividend yield is a bit more accurate that is throwing down here. Um, Not saying it's perfect, but as you can see here, the dividend yield of 0.64% is pretty low for a dividend portfolio. So really, why would I include it anyways? Now, the answer to that is kind of interesting. So, if you go over to the investor relations section of Nintendo's website or on any of their annual reports, really, you should be able to find their dividend policy information. So, Nintendo has a fairly unique dividend policy where it pays out dividends twice a year, but the dividends are actually variable depending on how good the company is doing. So, it's going to do an interim dividend after the first 6 months of the year of the fiscal year, not calendar year. It is a little offset, but where it's going to distribute 33% of the company's operating profits. And then 6 months later, after the full fiscal year ends, the company will do another dividend based on the greater of 33% of the operating profits for the full year or 50% of the consolidated net income for the year, less that first dividend it paid out during the year. So it's not going to double pay on that first 6 months. But due to this, the just amount of the dividend it pays can vary significantly. Note for that full year dividend, it's going to be the greater of that 33% of consolidated operating profit and then 50% of consolidated profit. That greater is just because sometimes there can be weird things that will affect kind of one-time items or just different accounting things that will affect whether consolidated or operating profit ends up being higher. But because that 50% consolidated profit, usually that second dividend does typically end up being quite a bit for more than that first dividend for the first 6 months of the fiscal year. Now, because of the dividend payout policy, Nintendo shouldn't ever have an issue paying its dividend because it has that policy of keeping the payout ratio at a very healthy level, always less than earnings. The company also just has a lot of cash. So, looking at its most recent annual report, you're going to see it has about 10.6 billion US dollars in cash and deposits compared to total liabilities of 4.5 billion. So, cash well in excess of all liabilities. It's a pretty healthy company. The big worry I would have with it as far as including in my portfolio isn't the health of the company. just that future performance of the company and how it's going to affect dividend payouts. Scrolling up a bit within that most recent annual report, you'll note that the income for fiscal 2025, so the year ending March 31st of 2025, just because of how Nintendo's fiscal year works, the income does not look great. You'll be able to see that the ordinary profit, the operating profit, everything is quite a bit down for the last several years. And that's just because when you're looking at that Nintendo Switch life cycle, it really is dying down quite a bit. They're launching the Switch 2, which is hopefully going to kind of prop that back up. But the company, the operating profit, total profit of the company has been going down a bit. And so the income doesn't look great. And if you look up the dividend history for the stock, the two most recent dividend payouts aren't really that great either. Even with the success of the Nintendo Switch 2, I mean, this is kind of before how well it did actually sell, but Nintendo's management has made projections for how the company is going to perform for this upcoming fiscal year. The projections are slightly higher than the most recent year. Operating income is projected to be a little higher than it was in 2025 for the fiscal year 2026, but still not that much better. Now, I think these projections could definitely be conservative based on how well the Nintendo Switch 2 has been selling so far and all the increased software sales that will go along with it. But I don't think the outperformance will be near enough to get the dividend to where it needs to be in order to be more in line with my portfolio goals. Because even if the operating profit doubled from where it is now, so we're getting back into line with fiscal 2021, 2022. Even if it got back to that level, it would still put out a dividend yield of, I mean, anywhere to 1.5%, 2%. Even if it was a little higher than 2%, it would take quite just a decent drop in the stock price to be able to compensate for that. So that's really the reason why I decided to sell Nintendo out of my portfolio. I mean, the company really has performed very well over the last year, especially with how well the Switch 2 has been doing. But I think a lot of that's just because all the news, all the positive news. Obviously, when the company is projected to do better than it has been, the stock's going to go up. But for the purposes of a dividend portfolio, this is why I don't really feel like it really just fits. The valuation would have to come down quite a bit, and the profit would also have to ramp up. Now, Nintendo is reporting their earnings very soon. They're doing like a first quarter earnings report, I believe, on the 1st of August. I'll take a look at that, maybe do a quick short or something, and just kind of my take on how that impacts the outlook and my thoughts on it, if it affects whether I would want to add the stock back to my portfolio or not. Really, I don't see that being the case just because of how the dividend yield's likely going to be. I mean, the stock would really probably have to get cut in half just if we wanted to get back to that 3 to 4% dividend yield for my portfolio. Not saying Nintendo's a bad stock by any means. It very well could perform really well, but just at the valuation levels it's trading at, and then the cash flow that it's giving back to its investors doesn't really fit the portfolio. But thanks for watching. Let me know if you have any questions.